And so I would first encourage you to look into what's called the Eurodollar system, which is essentially this. We control the pyramid scheme in the U.S., the domestic dollar supply, but there's this offshore derivative system where everyone's trying to peg the dollars that the central bank doesn't control. That's actually been considered to be at the root of the 2008 crisis, and then this was kind of a cover story. But if we just get back to error, so we could say risk is error, right? So there was this embedded risk that we thought we had calculated and contained. But what was actually happening is because we have centrally planned money, it's pushing hidden risk into the economy, right? Because the free market distributed intelligence being defined as error correction, it's mitigated by the central planning of money. So these hidden risks accumulate. And that's why we've had increased volatility since 1971. We have these huge economic booms. We print a bunch of money. Inflation runs hot, but so do assets. Everyone thinks they're doing really well. And then we have these catastrophic retracements back to economic reality. And actually,
that's because incremental reaction to risk is not being implemented. That's what you'd expect, right?
We're diverging perceptions from reality, effectively. So even the correction in March 2020, that was the sharpest liquidity collapse in the history of markets. It was faster than 1929. So we would expect as more fiat currency, which is artificial liquidity, is pumped into the system, it's further distorting this economic perceptual faculty and creates even more volatile boom and bust. This is the Austrian business cycle theory in a nutshell. And the only way to resolve this is to let the free market clear errors. That's what it does. That's what consciousness does too, by the way. So you can think of the free market as our interconnected consciousnesses mediated by the price signal. When you disturb the price signal, our consciousnesses become divided and we have increased errors and blow ups.